Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thank you for joining us here at Mike on Money, where we talk about everything in the markets this week, last week, and what we see coming up. And today we're going to take a little bit more deeper look at just the global economy, what to expect with the reopening of the economies with the COVID vaccines rolling out, and what we expect to see over the summer here. With that, thanks for joining us. I know I took a week off last week, went to the Okanagan, and enjoyed a longer weekend in the sunshine, but kind of getting back to some normalcy out there. As always, everything we cover in these weekly updates is for educational purposes only. Always do your own due diligence or get professional advice before applying any strategy or information to your portfolios. Remember, you can always go to mikeonmoney.com, reach out to us there, or gather more information if you're looking for some updates and our other social media channels. If you're listening to us live today, you can ask questions. Just click that Q&A button. We usually try to get to it during the session, but we'll follow up afterwards if we don't have time. And if you're watching if you're watching the recorded on YouTube, or if you're listening to the podcast, as always, just go to mikeonmoney.com, send in your questions or give us a shout. Happy to answer any of those and see how we can help. So with that, let's dive into what's going on in the economies. Coming up this week, we are looking for the U.S. Consumer Price Index number for June. So this is just an inflation numbers that we've been tracking pretty much through the pandemic, and as we come out of it, just keeping an eye on that inflation number. It has been creeping up, fully expected. We should probably see another bump up for June, but we do see some slowing down on that for the balance of 2021, and then again going into 2022 is where we expect to see the real spike. Pepsi is also going to come out with their earnings, as well as JP Morgan and Goldman Sachs are coming out this afternoon. As far as the stock futures in the markets, we saw them just wavering yesterday and today, pretty flat. We're definitely into the summer doldrums with people starting to travel a bit more and get out there a bit more. Normally volumes do drop off in summers. We didn't see it last year because everyone was at home and in front of the computers. But this year we're definitely seeing a bit of that slowdown start to kick in as the economy is reopening. People are getting out there more. As I mentioned, I was out in the Okanagan. Things definitely picking up as far as travel here in BC goes. And I was in Montreal also last Monday, and the airports are picking up. If you do have any air travel booked in the coming months, or certainly in the coming weeks, the airlines are struggling a bit with the ramping up of volumes. It's almost quadrupled apparently since July 1st. So, have some patience out there for them. I know they're trying hard and they're trying to get staff back. And as we'll talk a bit about the reopening, that's going to be a major theme we're going to see in all industries. As I mentioned, the major stock indexes climbed a bit higher in recent sessions. No big movements, as we're looking for the quarterly earnings, and again, those volumes off a little bit. And overseas, we saw it tick down just slightly. So nothing dramatic going on, which is good. That's what we want to see in slow markets, or in slow volume markets, is just pretty much even keel, which puts them in a good position for when volumes come back to have another wave upwards. So that's what we're looking for later in the later part of the summer. Pfizer's got a bid out for their booster for the booster dosage. A bit premature, still a lot of testing and data needed, but Pfizer is pushing health regulators to authorize a third COVID-19 booster, which would address the Delta variant. The regulators are want to do a bit more testing around that, and of course we're getting other variants out there. So do they approve this one, or do they wait till something that's more comprehensive? There's a lot of information that's going to be needed before we go down that route. But Pfizer is obviously taking advantage of this new technology. They have the mRNA with the booster shot, and they also came out and said that they have a flu vaccine mRNA technology that they're going to be rolling out as well. So I think we are definitely going to see more of this mRNA technology being used in the vaccine process. It seems to be the better way to go, better on our bodies and more accurate, and also can deal with the various variants that we see from these viruses, especially the normal flu. I know it wasn't a big flu season because, of course, we were all in lockdown and wearing masks. But if we ever do get back to kind of normal flu seasons, one of the big challenges with the flu vaccine, it was always for one variant, and it would lighten the effect of other variants, but it couldn't deal with multiple, whereas the mRNA can. So that might be the better technology that they're going to move to in the future. So we'll take a look at that. Deal makers see M&A rush and then chills. Biden, we talked about this a couple of weeks ago. Biden's put out a antitrust proposal, kind of a crackdown on mergers and acquisitions to prevent, more big Amazons being created or Facebooks, at least have a more competitive environment out there. But in the meantime, while that gets put through the law and rolled out, deal makers or M&A activity is very likely going to pick up to try to get a bunch more mergers through prior to the new law coming into effect. So they expect a big rush here on the M&A activity, and then slowing down a little bit after the new law comes in. So we'll keep an eye on that. We've already seen a lot of M&A through 2020 and into 2021, but there might be some on the edge that we're going to see push through pretty quickly. Canada's lost year for immigration has been adding to the Bank of Canada's inflation headaches. Well, no surprise, of course, immigration with no travel last year plunged for Canada. And that really, changed the inflow of workers, both skilled and general labor. We're already showing those signs of rising worker shortages across different sectors. I mentioned the airlines, being one, but we're seeing that in the restaurant industry. As mentioned, I was in the Okanagan. They're seeing it out there in the hospitality industries. It's just hard to get people. And of course, when it's hard to get people, you have to pay a bit more. And as you pay a bit more, that's driving inflation as well. So getting back to normal immigration, or maybe even stepping up a bit of immigration to compensate for what we lost last year, might be something we're going to be seeing coming up here in Canada and other countries as well. Down in the U.S., the U.S. Senate is bracing for a hell of a fight on the infrastructure plan. Obviously, it's already been a fight for the infrastructure plan as it continues to go back and forth. Not surprising, the Republicans are pushing back wherever they can, and of course the Democrats also wanted to raise taxes to pay for the plan, which makes sense. But just not the Republicans' mandate, and they pretty much vowed to block anything around the tax side of things. So it's going to be a lot of back and forth, nothing unusual, especially with this 50-50 Senate. And we're going into the Senate votes here in about a year and a half. So there'll be a lot of positioning for that as well to try to secure a stronger Republican Senate, or Democrats taking more power on that front and not having all these headaches depending on what the outcome of that vote is. Yellows continue to urge the EU to back a global tax deal. Now, remember, at the G7, it was an agreement that they were all going to back. Now they're pushing that outside the G7 to try to get a global minimum tax for corporations. Canada's on board with it. It's not a bad idea. It's been a long time problem for countries around the world where companies take their earnings offshore. to lower taxed or even zero tax countries, and shelter a lot of their earnings, and not paying less than 5% tax annually, in some cases zero, if they've managed to set up a more complex structure. So having that minimum global tax in there would mean all companies would have to pay at least a minimum tax on all the global earnings. So we'll see how that progresses. It looks like there is a lot of global support, but of course, there's always going to be some holdouts in those situations. As I mentioned, JP Morgan and Goldman are reporting their earnings today, and they're making a big bet on tech to get into the UK consumer market. So this is focusing on the finance market, the IPO market in the UK. A lot of outsiders have tried to break into this market and not done well with it. JP Morgan and Goldman being some of the biggest players want to take a crack at it, see if they can do it. So we'll keep an eye on that, see if they can enhance their earnings and take that into the UK market. The big banks are bracing for a British foreign exchange class action as they're seeking to go ahead. They're looking for court's approval to go ahead with this class action. And basically what it's been going on for years now. It's a multi-billion pound class action against some of the world's biggest banks, allege them of foreign exchange rigging. We saw this, trying to remember how long ago now, but we saw it around the LIBOR, the London interbank exchange rate. So interest rate, the fixing of the LIBOR rates amongst the banks, and they all face massive penalties over that, even a couple of fine-ins. So this is along the same idea of trying to rig the exchange rates amongst the banks. So we'll see where that goes, or if it even gets to go ahead to move forward with the class action. And on the IPO front, we're seeing outdoor grill maker Weber taking advantage of the big surge of people staying at home and barbecuing in their backyards as they reveal a 62% year-on-year growth in revenue for 6 months ended March 31st. So the pandemic was really good for them, and they're looking to cash in on those higher valuations. Pretty much we've seen this, everywhere. Any companies that have seen big surges in prices, either out there raising capital or additional capital as the stock prices are inflated or higher due to the higher revenues they saw in the last year, or even the IPO surge that we saw through late 2020. And those are just companies taking advantage of that pickup that they saw if they were one of the fortunate industries that saw a surge. And pretty much anything around stay-at-home leisure activities. We saw the boating industry take off. We saw recreational vehicles take off, trailers, the RV take off, real estate, recreational real estate, especially anything waterfront, have a big surge last year. And same with gardening. We, of course, we discussed lumber as people stayed at home and did home renovations or new builds. And Weber was just in the right place at the right time. On the COVID-19 front, things are going well. Of course, we see the news every day. Now, when I say going well, I'm talking about Canada. I think Ontario was announcing moving into a new phase today. So they're progressing quite well with their vaccines. Same with Quebec. I think Quebec is pretty much open for anyone. They have walk-in clinics now. Sophia from our team was fortunate to go to a hockey game back there with the Montreal Canadiens, and mentioned that there was a walk-in clinic at the game. You could get your shot while you enjoyed the game. And BC's moving closer and closer to that. I can say my two teenage kids have gotten their second tax. So we're right down to the 18 plus now as far as second doses go. So pretty much across Canada, we can say the second doses are out there and available, and the numbers continue to improve and improve, which is great. In the US, a little bit of slowdown as far as the numbers growth. And I think every country, Canada's going to get to a plateau, I think, where, there's now a percentage of the population that just don't want to get it. And that's where the US is a little bit. And as a result of that, we are seeing some flare-ups in the COVID numbers. And mostly you could pretty much pinpoint on a map any area that has a lower vaccination rate are seeing, of course, logistically an increase in COVID cases. And the hospitalizations have pretty much the majority, I wouldn't want to say 100%, the majority for sure have been those without the vaccine. If you have the vaccine, doesn't mean you can't get it. It just means, of course, it protects you against a severe case of it, or in a very large percentage of the in the cases, you're protected from a severe case. And we're not seeing hospitalization. I think here in Canada, in fact, we're at 0 hospitalization of anyone who's had both vaccines for at least 2 weeks. So that's really good. We do see in other areas, especially, we're talking about the Olympics, Japan, they've gone to no spectators, not a big surprise. They're really low on their vaccination numbers. I think last I heard was somewhere in the mid 20% numbers for as far as the first vaccine goes. So obviously the government there has gone with no spectators at all for the events for the Olympics, just because they can't guarantee people's safety. And on top of that, they're in the middle of a big surge because of those low vaccination rates. And that surge has now gone into state of emergency again. So, not ideal for Japan, having the Olympics at this moment in time. But of course, it's not the country's decisions. It is the Olympic Committee's decision as to whether they pull it or delay it. And they've decided to go ahead. So we are going to have the Olympics, just no spectators. And that's going to put Japan actually in a pretty precarious position for the billions of dollars that they've spent to have these games. Not many countries or cities are able to recoup the dollars that are spent on the Olympics in the first case. But if you're not getting any tourist dollars and you're not getting any retail dollars or economic growth from the visitors going to those games, it's kind of a double whammy for Tokyo with these Olympics. So we'll see how it plays out, but obviously some challenges there. We're seeing that in other parts of the world where the vaccination rates are still low, and that's going to be something we talk about here a little bit more as we go through what the reopening looked like. All right, let's see. In the U.S., I mentioned J.P. Morgan. We're expecting some good numbers out of them. We've seen that pretty much across the board, same as Goldman Sachs. We're expecting some good numbers. We're gonna have to see how good they are, because the markets have driven up the stocks basically on some strong expectations, and really looking at the guidance going forward. The financial institutions across North America and most of the world have done fairly well. As I mentioned, a lot of that merger and acquisition activity has played well for these big players, as well as all that IPO and SPAC business we saw last year. If you want to know more about the SPACs, we did a video directly on that. You can go back and watch that. But that was the special purpose acquisition corporations for reverse takeovers that were pretty active last year. As I mentioned, we're looking for that inflation data just to kind of see where things are headed, whether we're seeing a little bit of slowdown there. Also in the news, Musk tells the court he dislikes being the CEO of Tesla, as he's on trial, or he's testifying on trial for Tesla's acquisition of Solar City, and whether that was appropriate for Tesla. So he's been in court for the last few days there, and obviously he's not enjoying the being called into court every day, and he's kind of testifying that Tesla, he's done all he can with Tesla, and he's expecting that to grow, and he wants to move on to other things like Solar City and, of course, his SpaceX program, which, if you saw in the news, we shot a billionaire into space, but we did bring him back. Or Blue Origins, which is Richard Branson's company, Virgin Galactic, where he went up in space, and of course Jeff Bezos. Sorry, he went to the edge of space, as Jeff Bezos will point out, and Bezos is due here in the next week or so to take his trip up. Actually, I think later this week, take his trip up into actual beyond the border of space, but into outer space. So we're sending a lot of billionaires out into space these days. Walmart's looking to raise us about 38 billion in a valuation on an IPO for their Flipkart, which is their India-based online retailer, and they're looking to do that through SoftBank, and it looks like they're going to be able to get it. So, you know, again, we see those IPOs and M&A activity happening around the world. GM has turned into its suppliers to help build EV vans. So GM has been pretty aggressive, try to come out with, of course, their EV electric vehicles, and been partnering with other manufacturers to try to get those out sooner than later. They do have plans, they've got a plant in, I believe, Ontario that they're opening up for building their EV vehicles, but it's not ready yet. Those things take obviously years to get up and running. So they're looking to, you know, team up with other manufacturers to get there. And they're working right now for the van, their commercial vans, to work with a German company to get that up and running sooner than later, as the FedEx wants to have a big order. And that's really what, when we talk about the EV market, and we're going to do a video, I'm going to interview, have a special interview talking about the EV market and what's happening in it right now. But really, when we talk about the EV market, of course, yes, there's you know, the passenger vehicles or the personal vehicles out there that have been growing massively. There's a lot of countries that have signed on to a 2030 pack, or 30 by 30 pack, where 30% of all vehicle sales will be EV. And some countries even have higher goals than that. I think Norway's got like 2025 that they're not going to allow any gas vehicles to be sold. But you know, to get there, a lot has to happen. But the bigger market, the bigger market that we're seeing sooner, I think I mentioned it before, is the commercial market, because it's a much easier market to value and really price in the benefits. Because you know, you can buy an electric vehicle for yourself, and sure, they're on most of the websites you go to. When you buy an electric vehicle, they have a calculator to say, you know, how much do I drive, you know, per month or per year, and you know, gives you a rough calculation of how much you'll save on gas by switching to an electric vehicle over the year, which is great. But on the commercial side, if you think about a bus, you know, it's really easy to calculate. We know the route that bus is going to drive. We know its normal maintenance costs, which of course you do not have the big maintenance costs in an electric vehicle, because you don't have all the parts that are moving. You don't have all the lubrication and everything that's wearing down, and your motor, of course, your electric motor runs far less maintenance, because of you're not blowing up fossil fuels inside little tiny cylinders to make it turn. So so when you look at something like a bus or a delivery vehicle, where you can really easy quantify the maintenance savings, the mileage savings, and the overall servicing of the vehicle right away, you know, you can build an easy business case to make the conversion. And that's, you know, if you talk about ESR or you know, environmental green invested in technology, we're at that point that dollar calculation makes more sense now. So you know, we're never going to drive green technology acceptance into industry until the kind of the finances make sense, because that's going to be the tipping point. And that's certainly where we are with the EV commercial vehicles, and that's where we're going to see that big ramp up, and we're going to have that special video out hopefully in the next week or two. MSB recovery to go public with nearly $33 billion mega SPAC. So again, going back to the SPACs, this is where they kind of raise the money first and then go find the deal. Anyway, MSB recovery, which is a medical and Medicaid secondary payment structure, where they go and cover those payments for people, are going public with a huge valuation of 33 billion, or just under 33 billion, which is the second biggest SPAC we've seen so far. So quite large. As I mentioned, Virgin Galactic had their flight taking Richard Branson up to space. and they decided, hey, you know what, we're going to go out and sell 500 million stock, $500 million stock sale to raise some capital, because now we're going to expand and offer all the space travel, and the stock tumbled the next day. I think the market's still a little bit leery or a little bit concerned about how close we are to have a commercially viable space tourism. Obviously, still very expensive. Virgin Galactic being a little bit on the lower end on the price end. I can't remember the numbers, but compared to the others, because it does, it's kind of like this plane shuttle style of ship that skirts space and then comes back down, versus Bezos' plan of taking people directly up into space, and of course with Musk, who plans to take you to the moon and Mars. So between the three, Virgin Galactic looks like they've got the lower price model, but still the market's a little hesitant to say, hey, this is definitely a thing I want to put money behind. Canada coming up. Bank of Canada's tapping financial regulator, Carolyn Rogers, for the #2 job. So this is Bank of Canada's governor and deputies, and there's 6 spots there, and she's moved up into the #2 spot, which is great. She's got a great background, and of course adds more diversity to that council that's desperately needed. Canada's green bond market. So we talk about green technology. The green bond market has been riding high after the second quarter. People have been paying extra premium for the environmentally friendly bonds, and investors are paying it. So why wouldn't they take that? I don't know if I'd want to chase the price in. I mean, there is some good investing in green tech, but you don't necessarily want to take too much of a premium loss just to get it. I think there's some quality companies or quality investments you can get out there without having paying that premium. But we did see a big surge just on the demand, and always goes back to my theme. Remember, when you're out there, when you're investing, know what you're buying, but also know why you're buying. Don't pay the premium for the wrong reasons. Paying a premium doesn't not necessarily a bad thing, but it's really understanding why you're doing it and is it worth it. In a lot of cases, when we see these surges, people are just throwing the money at a theme, not necessarily the underlying story. So always know what you're buying. When I talked about the airlines getting busier, with Canada's Porter Airlines looking to double their fleet with a major order with Embraer. Porter, if you're not familiar, they're mostly an Eastern commuter airline, mostly from Toronto downtown. They fly from the downtown airport, not the major Pearson airport. And they go between Toronto, Montreal. Mostly they have other flights into the Maritimes and across Canada, but they're mostly smaller commuter. Kind of the business traveler is the biggest ones, and they're also looking to add some routes to the United States, and they're talking about Mexico and Caribbean. So it might be something like where Porter is moving out of their commuter status, but for now, that's pretty much their niche market. As far as the exchange goes, the US dollar is likely to fall a little bit on this inflation news that we're coming out. All things being equal, the US dollar has been on a pretty solid downward trend. It has gone up a little bit. The Canadian dollar is now below 80 cents, where it was north of 82 for a while. But we've fallen back a little bit here because our inflation numbers have been a little bit higher. And we are expecting that inflation number to go up a little bit in the US here for June. On the commodity front, crude prices gained a bit, so north of $75, holding quite strong. Pretty much just on the global supply and the forecast for the demand to start to increase a little bit. Funny case, the OPEC Plus have had agreements to kind of keep the supply in line. We've seen a bit of a failure of those negotiations more recently, which was kind of expected. And in fact, if you go back to our videos early in the year, I was kind of expecting it earlier than it started to happen. The country's actually stayed in the agreements pretty strongly through that oil price crisis. So the fact that some are starting to break out now is not a big surprise. And gold edged a bit higher again, just on that inflationary news. All right, so let's talk about the reopening. So everything's back to normal and we're all going out there. Of course, we all know that's not the case. We've talked a lot about the challenges with reopening, not just within country, but with the world. And that number one is vaccines. And we're going to talk a bit more about the vaccinations, the rates, how that affects reopenings, but how it affects Canada as a whole, or the US as a whole, or any countries who are further ahead on the vaccination rate. Of course, inflation is always a big theme in this reopening, so we'll talk about that. And we're going to talk about savings rates and deployment of those savings as we reopen here. So on the vaccination front, so vaccine security and efficiency will really shape a big part of this reopening. As I mentioned, Canada, things going really well. Our numbers are still holding strong, even against the Delta variant. Because if you look at the numbers, Canada, we were number one. I'm not sure if we're still in the number one spot when it comes to adults vaccinated. First dose for sure. Second dose, we're moving up dramatically on that front. But when we talk about reopening, that is Canada. So we're reopening within Canada, but we're not opening completely with the rest of the world. There's still a lot of countries, yes, we have our vaccines, but maybe we're not allowed to go there, or different rules when you get there, or things are closed when you get there. And then, returning, depending on what country you're returning from, if you've had both vaccines, etc. So when we talk about reopening around the world, the vaccine rate, we really have to get the world's vaccine rate up. And nothing's better, a bigger example than Tokyo with their low vaccination rate and shutting down the Olympics. So if you had a trip booked and hotel books and all that for Tokyo, that's out. You can't go, or you won't be allowed in. And of course, for countries like Tokyo or Japan rather, they're losing all that revenue. So when we talk about this reopening, what's the one big thing we have to keep a really close eye on is the global vaccination rates, not just our local ones. If we're talking Canadian business, yes, the local means a lot, but then again, know what you're buying. If you're buying a company that generates a lot of income on the global front, then you have to be really watching that global vaccination rate. And we're seeing, I mentioned Asia and emerging markets. There's this desynchronization happening of global growth due to that the vaccination rate, due to the lower numbers and going into shutdowns again, and not really getting a really steady uptick when we talk about growth and the economic expansion. Of course, oops, wrong way. Of course, on the inflation side, bottlenecks. We continue to see bottlenecks, in terms of supply. It's at a 5-year high. It's probably going to last a bit more through 2021. A lot of this, there's kind of two factors happening here in this bottleneck. We had the shutdowns, but we still had demand. So, when things reopened, they were just kind of trying to catch up on the demand that they missed during their shutdowns. Which puts them behind, and they're trying to ramp up and get that out there, but that takes time to move that through the supply chain and get out. In meantime, as more and more of the world starts to reopen again, you're just getting that bigger and bigger surge. So pretty much we're looking at supply chain bottlenecks through 2021, and that's going to push a little bit of inflation. Now we're not worried about that inflation. We've got to manage it and deal with it, but we're not overly worried about that, because when we do get caught up on the supply side of things, that pressure is going to ease a little bit. The employment gap I mentioned, there's 4 million jobs open in the Eurozone, there's 7 million in the US. Trying to keep that wage inflation in check. Immigration's been a big part of it. We've seen, some of the stimulus packages obviously have moved people from looking for work versus not looking for work, but we've also seen, as we've talked about, there's been a lot of industries that did not slow down. They expanded, they grew through this pandemic, and a lot of those employees that were laid off have gone and found jobs in other areas. And of new careers, which is great. But that's left a shortage for industries who are trying to rehire. Uh, if you've been to a restaurant lately, they're struggling trying to get staff back. And it's not that there's not people out there looking, they don't have skilled workers, so experienced workers. A lot of them have gone and found other jobs and other careers. So when you try to bring back in, try to bring people back really quickly, that's where they're struggling. Is yes, they might be able to bring in bodies, but without those experienced people to train the new people, that gives you a gap in your service levels, and obviously difficult for business owners to try to cope with that. We're seeing that in the hotels. Obviously, when we had the heat wave, I talked to some of the hotel management, and they went from 26% bookings here in Vancouver to 100% capacity in a matter of days. They didn't have the staff, they didn't have the kitchen crew, they didn't have the supplies. If you went into any one of those hotels, or a lot of those hotels, you saw a lot of items not on the menu, or out on the menu. Just they weren't ready for the surge as they tried to restaff and resupply their wares. I mentioned the airlines, same thing. They tried to bring people back. They couldn't get, even if the people are available, getting them back that quickly, getting them back, into the crews, into the planes, and getting those flights staffed. A lot of challenges. So no matter what you're doing out there today, especially if it's anything to do with hospitality, any of the industries that were closed down and now reopening, try to have some patience out there. They are trying their best, but we're having this massive shortage of employees. And as I mentioned, with the immigration, there's a lot of jobs that aren't even able to be filled because we don't have enough people. So that's all good for the reopening. But what is that going to mean from an investment standpoint? That means those hospitality of those reopening sectors are going to feel a pinch, a cost pinch, and also a service pinch, because they're not able to necessarily keep up with that surge of the reopening. So gonna have to be really careful watching that. It might look really good as the numbers, or the number of people going through look good, but if you're blowing all your revenue on cost, then the profits aren't. We're not going to see the pickup in profits until we see that stabilize. So keeping a really close eye on that employment gap, especially in those sectors, is going to be very, very important. Inflation spike, as I mentioned, we do have that transitory inflation spike happening, due to the temporary supply bottleneck, and also that surge of people, either buying or starting to spend money or traveling. But we're going to see that big surge as people come back. But we have to really look at the longer numbers, because we will flatten out that curve pretty quickly. And then on the savings side, we have to look at the residual savings. So through the pandemic, people hoarded the cash, right? Because they didn't know what was happening. There was always concern. We've got about 500 billion euro in Europe, and about $1 trillion in the US. Canada's numbers are way up there as well. A lot of the stimulus dollars haven't been spent yet. So, and then we've got pent up demand as people haven't, maybe held off on purchases, or haven't been able to make those purchases. Again, going back to the supply chain, maybe, what you want to get is out of stock. Again, anything to do with the home, or leisure, or recreational, trying to get something at home. Go try to buy patio furniture, barbecues, as I mentioned, or anything along, gardening or wood or anything along those lines. You could be a long wait before you can even buy it if you want to. So there is this big expected surge to come into the GDPs, and some of that savings to get redeployed. We're going to have to wait a little bit for a little bit more stability, and obviously really looking at that supply chain. But we can look forward to that. And as far as investing goes, that's a bit of patience, I'm saying, in the markets right now. We are expecting that next push up. And also consumption, will lead to the recovery as people, relax a little bit more, feel a little bit more comfortable, to start hearing some positive things happening. Definitely when it comes to travel, definitely when it comes to the hospitality side of things. There is going to be this hesitation. And if you're like me, you've already seen this hesitation, with BC moving away from the mask requirements. I was up in Whistler on July 1st when things opened up, and it was very strange going from the day before everyone masked everywhere you go to the next day. Wow, hardly any mask or quite a few less masks, and you realize there is this hesitation to just go, cold turkey and try to go back to the way things are. So there is this transition period, and we're going to have to, let society or let people get through that. And again, that goes to my comments of being patient, patient with people, patient. Companies are obviously taking it slow as well. They don't want to be, the center of a big breakout or outbreak rather, and have to dial things back or have to close down again. So we have to just wait for this, the consumption demand to pick up again as people get comfortable and moving into these recoveries. And that goes around the world. Obviously, Canada, is in a great situation. The US is doing well, except for some pockets. Europe, bit more challenges, and the bigger ones, Asia, the Asian countries having some, obviously more challenges than we see over here in Canada. And again, it goes back to the comment, it is global. So with that, I'm going to let you go. I am going to take a bit of hiatus this summer. We're going to get our weekly videos out. They'll be pre-recorded. I will, as far as the weekly updates go, I'll do one at the end of July, just to give you an update for July. And then I'll do one in August to give you an update. We'll go back to regular weeklies again in September. Everyone, I don't want people sitting in front of the computers listening to me drone on. But we will get, as I mentioned, we're going to do a special on EV cars on that marketplace, and we'll have other announcements coming out through the summer where we'll do some deep dives into specific topics just to keep you all informed. And if you have any topics you want to hear about, do go to michaelmoney.com. Let us know. Keep an eye on our YouTube channel and our podcast channels for those special interviews. Oh, and we are going to be launching a whole new series that are going to be interviews with CEOs of growth companies that we feel are great stories and that you might want to hear more about across different sectors. So we're just finishing that. We're finishing the lineup for that, and we'll be launching that out. So keep an eye on that as well. With that, go enjoy that sunshine. Look forward to talking to you again soon. Thank you, everyone. Bye-bye.